Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets. These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Canada's Agnico Eagle Mines raised the low end of its production outlook for the year, benefiting from a surge in gold prices and a ramp-up in operations after coronavirus-led shutdowns. Massive stimulus packages to aid economies reeling from pandemic-driven woes and a low-interest rate environment have helped drive up gold prices nearly 30% so far this year. The miner now expects full-year gold output in the range of 1.68 million to 1.73 million ounces, compared with its previous forecast of 1.63 to 1.73 million ounces. Agnico said average realized price for gold jumped 31% to $1,726 per ounce from a year earlier.
Moving on to the top news in the energy sector.
Iraq's crude oil exports have increased so far in July, shipping data showed and industry sources said, suggesting OPEC's second-largest producer is still undershooting its production cut target under an OPEC-led deal. Exports from Basra and other southern Iraq terminals to July 29 averaged 2.75 million barrels of oil per day, based on figures from Refinitiv Econ and an industry source. That is up 50,000 barrels of oil per day from June's official figure for southern Iraq exports. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC+, began a record supply cut in May to bolster oil prices hammered by the coronavirus crisis. Iraq is cutting output by 1.06 million barrels of oil per day under the deal.
We will now look at the top news in the agricultural sector.
The European Commission on Thursday cut its 2020-21 forecast for usable common wheat production in the European Union's 27 countries to 116.6 million tons from 117.2 million estimated a month ago. In supply and demand projections released on its website, the Commission left unchanged its forecast for EU27 exports of common wheat, or soft wheat, for the 2020-21 season that started in July at 25.0 million tons. Projected EU27 barley output in the period was lowered to 54.1 million tons compared with 56.1 million a month ago. Meanwhile, the EU's executive raised its forecast of usable maize production to 72.55 million tons against 71.9 million last month.
Next we have agricultural price moves.
Chicago corn futures rose for the first time in 5 sessions on Thursday, with bargain buying supporting prices, although gains were capped by expectations of a bumper U.S. harvest. Soybeans were slightly lower, pressured by favorable crop weather in the U.S. and concerns that elevated tensions between Washington and Beijing could curb China's appetite for U.S. supplies of the oilseed. The most active corn futures on the Chicago Board of Trade had risen 0.15% to $3.26 minus 3/4 a bushel by 10:36 GMT, having closed down 1.1% in the previous session. Soybeans were down 0.2% at $8.83 minus 1/2 a bushel. Wheat lost 1.2% at $5.26 minus 1/2 a bushel, with ample global supplies keeping the market on the defensive.
We will now take a look at energy price moves.
Oil prices fell on Thursday, as surging coronavirus infections around the world threatened to jeopardize a recovery in fuel demand, just as major oil producers are set to raise output. The most active Brent crude contract for October fell 58 cents, or 1.3%, to $43.51 a barrel, at 12:24 GMT. The September Brent contract, which is expiring on Friday, fell 57 cents to $43.18 a barrel. U.S. West Texas Intermediate crude futures were down 70 cents, or 1.7%, at $40.57 a barrel.
Moving on to metal price moves.
Copper prices slipped on Thursday as investor confidence was hit by a resurgence of coronavirus cases and more evidence of the economic impact of the pandemic. Benchmark copper on the London Metal Exchange was down 0.7% at $6,428 a ton in official trading. It had surged more than 50% during a rebound from lows in March to a two-year peak of $6,633 a ton on July 13, partly due to worries about supply from top producer Chile. LME aluminium shed 0.3% to $1,719 a ton in official activity after touching $1,731.50, the highest since March 5, while lead gave up 0.7% to $1,860. Zinc dropped 0.6% to $2,284, having hit a six-month high of $2,312. Nickel fell 0.8% to $13,771, and tin lost 0.3% to $17,884. Finally, we have the most recent news on the financial market.
The US dollar dipped on Thursday after US President Donald Trump raised the possibility of delaying the nation's November presidential election, and it is on track for its worst monthly performance in a decade as the spread of the coronavirus continues to weigh on the US economy. The greenback has been in a month-long nosedive as the continued spread of coronavirus across US states weighs on the economy. Data on Thursday showed that the US economy contracted by 32.9% in the second quarter, the steepest pace since the Great Depression. In a separate report, the Labor Department said initial claims for unemployment benefits totaled 1.434 million in the week ending July 25. The dollar index against a basket of currencies was last down 0.02% at 93.34. It is on track for a 4.17% decline this month, which would be the worst monthly performance since September 2010. The euro set a new 22-month high of $1.1808, before dropping back to $1.1791, up 0.01% on the day. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.